The markets are in a precarious situation right now. They've been trending lower. They made a new low on Thursday and then had a reversal day on Thursday, took off on Friday. So the thought is, what's going to happen now? Are they going to go back up? Is this the beginning of a new uptrend? Or is it in the middle of a continued downtrend and the market's going to continue to be nasty on the downside? So all right, let's look at that. That's what we're going to investigate, and we're going to consider the patterns that we've been thinking about. And I also want to add an astrological interpretation, because as of this morning, and now this is Sunday, the 27th of February, there's a 5-planet conjunction in the sign of Capricorn, which is extremely rare, particularly since Saturn is in Capricorn as one of the 5 planets. The last time that has happened was in 1962. And the time before that was in 1903. So about 60 years apart. It's a really rare event that we're experiencing right now. And of course, there's a really rare event happening in the world. You know, this Russia invasion of the Ukraine is clearly there. They set it up, they planned it. It's not an accident. And the question is, will it continue or not? And how long? And what's going to be the impact of it? Well, let's look at history as a reference. First, I want to point out that the stock market itself is repeating numerous patterns, what we've talked about before. The 1962 60-year cycle is repeating. The pattern from 1961 into 62 is extremely similar to what it is now. The 1946 stock market pattern, for different reasons, is repeating, and it continues to be repeating. The 1901 market is repeating, and the 1903 market, which is very similar because of the 60-year, 59.5-year cycle repeating, is also very closely repeating. And then, of course, there was the 1929 market we talked about, which was a crash-type pattern, which may or may not still be there. And the 1987 market, which we talked about, which may or may not still be there. So let's look at the unfoldment of what has happened, what the probabilities are at this point, what to expect, and get some sense for where the future is leading. Let's start with what I just said, that the 1962 market is repeating. Take a look at our chart above, and you see the basic story. This is 356 trading days, which is about a year and a half of time, where the red line represents the present market, and the blue line represents, the red line represents our market now, and the blue line above it here represents 60 years ago to the day. Now, anyone who sees this is going to recognize that they are extremely similar and have been extremely similar for 18 months. So, what's next? What comes next? Well, if this continues, if this ongoing repetition is able to continue, oh, this is blowing it up. This is the same story, but only going back about 150 trading days. We wanted to blow it up to show you how incredibly similar it really is. Again, the red is us in the present. The blue is the past. And that 60 years ago to the day is repeating. This is Thursday, and this is Friday, that up day, the little red bar. Notice the market here is a little bit weaker than it was 60 years ago at this point, but the up and down periods are in sync. You had this up phase and down phase and up phase and down phase and up phase and down phase. You couldn't have asked for a better match. So, what happens next? Well, if this continues, that's what happens next. We'd be right here. This little low point starting a rally, and then there's a little dip, and then there's another rally up, and then, thing goes down. This high would come out roughly March 15th. It could be a little bit earlier. This low would come out June 24th. A little bit earlier, a little later. March, April, May, June, July, August, September, October. This whole year is kind of a down move until October, November. Okay, well, if that happens, we're getting ready for it. We're preparing for that. We're trying to avoid having that happen. Here's another vision of the same story. These are the same two markets, where the upper one is our present market, and that is Friday, the 25th. And this is the 62 market underneath it, 61 into 62. And you see where we're at right now, the pink lines line up to that low, and this March 12th lining up with March 15th of 62. It was 3 days off on the 60-year cycle. You see what we do here is a little up move, which started, a little down move, which goes on till like the 6th or 7th of March, and then another last up move. And in this case, it would show up around the 12th or 13th of March as a high. And then the thing starts to fall, and by April, it's retested the lows. By May, it's way lower, and by June, it's way, way lower. This was a 22 or 23% break, and we could expect something similar from that high point, which is already, 7 or 8% off the highs. Okay, so this is another way of seeing the same pattern. There were other market patterns which were similar, and I'm going to show you those because they're still repeating. And we have two of them here. This is a different program. It's called Navigator. It's a great program that we use, and it shows the 1946 market is here. Okay, this would be July 31st of 1946, and that would be exactly where we are in our market development, according to the correlation. And then it goes a little bit. See, you have the same basic pattern. A couple of days up, a couple of days down, a final up. This high came in like the March 9th, a little bit earlier, and then a nice sharp break. The decline was quicker at the beginning and slower at the end. The other one was kind of in 62. It was more of a gradual kind of a thing. This one's 1939. It's February 27th of 1939. Interestingly enough, it's exactly 83 years ago, the same day of the year pretty much. February 27th matches February 25th of 2022, 83 years ago. And this is a high correlation and has been for the last 12 months. This is roughly 10 months, and this is our present market for the last, no, this is the 46 market. They're very similar to each other. And this one also has that up move down, that up move into like the 9th, 10th, 11th of March. And then it falls really, really hard into middle of April. Slightly different in here, but it doesn't really go up until this is July. And later in the year, it has another dip. This is October. So 1946, 1939, 1962, are very similar to each other and very similar to the present market, and the future going forward for all three of them is extremely similar, and the market basically goes down after like March 10th through 15th. They all have a high and then they fall apart. So that's a very high probability in our present market as well, because each of these patterns has been repeating for a while. Not only that, there are astrological reasons to think that these patterns are not just accidentally repeating. They're not just accidentally the same. Because the pattern recognition approach will have a list of market correlates to the present, and they don't all go forward the same way, and they seem to have been the same for the last 12 months or so. So how can you tell a pattern that looks the same from a pattern that really is likely to repeat. And that's where the astrology comes in. We find astrological reasons for these markets to repeat that are happening again in the present. The pattern in the present astrology is similar to the past, and therefore the probability of the pattern which looks the same is actually likely to be the same. Ergo, it's likely to continue the same way. Okay? That's our logic. So it transcends just looking for patterns. It transcends just looking at what looks the same. We're going deeper and trying to find a cause for why they look the same and what's happening. The other factor that's kind of very important here is that 1962 you had the Cuban Missile Crisis occurring, which again was an interaction with Russia trying to do some aggression. In this case we have Russia trying to take over the Ukraine and somewhat aggressively doing so. But there's a similarity in pattern. I want to show the astrological overlap that's happening also, because it's quite impressive. We're right here now. So the astrology, the Vedic astrology called Jyotish for 1962 is this. As you can see, that is an astrology chart. For those who are familiar with it, it's basically a number 10 is in this position. Number 10 is the sign of Capricorn. Saturn, the Moon, the Sun, Venus, Mercury, Ketu, and Jupiter were all on February 4th, 1962. They were all sitting in the sign of Capricorn, an 8-planet conjunction. It's the only such thing in the whole century where they've been together in Capricorn, and as a consequence, something remarkably crazy happened before and after. You had this huge stock market crash. And then later in the year, actually, you had the Cuban Missile Crisis, and then the following year you had Kennedy assassination. So something dramatic came out of it. I want to show where we are right now in 2022. We have a very similar story. This is the present combination in 2022. That is today. That is this day. February 27th, February 28th, 2022. This again is the sign of Capricorn. Venus, Mars, the Moon, Mercury, and Saturn of course is the controller of the sign of Capricorn, is sitting there in Capricorn. This 5-planet conjunction is going to happen only for a couple of days, because the Moon moves through the sign in a couple of days and then it leaves, but you'll still have 4 planets remaining. This is the closest to the 8-planet conjunction that we had in 1962 that we've had since then, and therefore the similarity between the world events and the events back then is most similar. And indeed, Russia is involved again, and Russia is being aggressive again, and so it's not identical. This time there's an actual war. Last time there wasn't. But the nuclear threat was available then. The nuclear threat is popping its head up right now. We don't expect it will manifest, but nevertheless it is repeating. You had a Catholic president in Kennedy, and you haven't had a Catholic president since Kennedy until Biden, and Biden's the president of the United States now, another theme that's repeating. There's quite a bit to speak for the similarity. And the other thing is, what's the last time before that you had this conjunction, this big gathering in the sign of Capricorn? And it turns out it was in 1903, January of 1903. January 28th of 1903, which is not that far off February 4th of 1962 and February 27th of 2022. So it's a little less than 60 years. In this case, it's 59 plus years, because we mentioned the synodic cycle of Jupiter and Saturn is a 59.55 year cycle. And again, in that date, you had Saturn, the Moon, the Sun, Mercury, and Venus all together in Capricorn. And why is that meaningful? Well, let's look at the stock market back then. Okay, first let's look at the 1901 market. which was repeating a kind of a similar story. The upper one here, this is again Navigator program, the upper one is 1946, the lower one is 1901, and again it has that little up move into early March, kind of hangs around a couple of days, then it falls hard. April, May, June, July, August, September, October, very similar. And that was when we had the same conjunction, that 5-planet conjunction in 1901 that we had, it was a similar pattern 120 years ago. Okay, the one in 1903, which would be the identical time point, it's slightly different. This would be the time, the computer comes up in November of 1902, so it's a little bit off the actual date. The January date would be here, January 28th of 1903, and this was the dip and then the rally and then the decline. That decline was even bigger in 1903, and it lasted all the way through. It didn't have that kind of gradual decline into June, rally into August, and then down again. This one just went straight down. In any event, it was the same combination astrologically as 1962, almost the same combination astrologically as 2022. The market patterns are highly correlated with each other, and they all basically fall until at least June, and in most of them also have a low at the end of the year in November or so. So there's enough evidence and there's enough support for the logic that you'd have to begin to think that whatever's going on in Russia and whatever is going to be the consequences of the war in the Ukraine, that it's not over. The war itself may be over soon. The actual fighting could be over when the March high comes in, that March 10th through 15th high. It could actually be that until that time there's an improvement in the situation, and by March 15th the actual fighting is done. The Cuban Missile Crisis thread only lasted 12 days, from October 16th to October 28th of 1962. So the actual fighting and ferociousness may be over, but the impact of this in terms of longer-term effects on the economy are clearly likely to last, because the stock market is not following the economy. The stock market tends to lead the economy. It tends to be almost like seeing the future. So if the stock market's going to wind up having a hard year and having difficulties until the end of the year, and if you look further, it actually has some issues into 2023, it's still not ready to go up directly. It's possible the economy will have weakness in various forms. People think inflation. It may or may not be inflation. I've heard stories that it might be deflationary because there's less money. If the stock market falls, there's less money. Even the wealthy are not interested in spending money. There tends to be a hanging on to money kind of thing, as opposed to what was expected, which is inflation. And like Harry Dent and some of the other guys are talking about deflation. It's possible anything like that could happen, but the economy is not going to be in good shape. That is clear. And what to do about it and how to protect your money? Well, there are various views on the subject. One would be to buy gold, although gold did start rallying. It got up to 1950 or so a couple of days ago on that spike down in the S&P. But it may not be that gold is going to continue to rise. It's not been the inflation hedge that we expected. If inflation isn't what comes, gold may not work. Some people think Bitcoin. There's a chance that Bitcoin in the long term may be a value add, but it isn't necessarily now. I've heard stories that the treasury bonds actually could be a good buy right now because they've been so lackluster and people are expecting interest rates to go up and they may not. And that during the 2008, during the massacre in the markets in the 2008, the treasury bonds actually were a great investment. So it's possible that, and also fine art, they recommend as buying art, particularly highly relegated, famous pieces of art hold their value and potentially can improve during this economy. So there are numerous theories on the subject, but some people think cash is not a good thing. I'm not going to mention any names, but they think that cash is not a great idea when there's inflation. But if there isn't inflation, cash is definitely a value. And my opinion is having cash right now, when everything is in a crazy mode, and when there's a good chance that inflation may not happen, and there's a good chance that the markets are going to fall, getting the money out of the markets is wise. Having money in cash right now, you can't lose anything. And knowing you can't lose anything is probably a value add over taking a risk on putting the money somewhere else, which may or may not work. Okay? And until this kind of settles itself out and we begin to see if inflation is happening or deflation is happening and Bitcoin is working or not, I think having money in cash is absolutely the most intelligent thing to do for next year or so. And if it isn't, you certainly don't lose much. You'll lose the potential interest rates. Okay. All right, on that note, I think we covered the territory. This is an update to our prior discussions on the market crashing. And you can go to our website, tradesthefuture.com, and you'll see that we have additional videos and we have additional options for people who want to trade, including systems that are very well tested that conceivably could get you through this, get you through the night all right. It's a great song. In any event, and we also have courses available for people who want to do it themselves. Thanks a lot.